Good morning, everyone, and welcome to the Quantum Leap Monday morning, July 14th, 2014 pre-market session. We have lots to talk about today, so we're going to veer off our normal normal process. Well, I'll try to veer off of it. It's hard not to follow it. My name's Doug McKay. This is Quantum Leap. Quantum Leap has been around for coming up on 5 years next month, and we have a private Skype chat. If you want to come in and check it out, we come together. We are retail traders helping retail traders. We're what we call a self-organized learning environment, or a SOL. If you want to check us out, give me a Skype request at Doug_McKay. You will need a Skype account until we get the new website up and running. I'll be the one from Windsor, Ontario, Canada, or you can send me an email to my email, d.mckay@stealthtrader.com, and you can ask me questions, find out what we're all about, etc., etc. Well, we do have lots to go and talk about, so I've got to get the legals out of the way. This information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own plan, do your own due diligence. Okay, so where to start? Usually we go through and we start with the macro to the micro, and we look at the key numbers from the macro to the micro. Then we look at the trends macro to the micro. But it's Monday, and it's sort of an interesting week, I think, in the markets. So what we're going to do is this morning we're going to start right with the COT report. So let's look at the COT report. What you're seeing on here, the red represents the S&P. I think it's yellow. I'm colorblind. Yellow is the small specs. The light blue is the commercials, and the dark blue is your large specs. And right here is your center line for the commitment of traders. And above this line is net long, and below this line is net short. So I've been saying that I didn't think the market was, falling like everybody else was saying. I said that this was a normal rotation. It does not violate the trend on the macro level, and that we had to come down to find buyers with more conviction. We also had that cup and handle pattern from last week that is not invalidated until we get below the 1952 area. And we came down to that 1952 area and we bounced right off it. A lot of stuff down there, a natural rotation back down to advertised for more buyers, and we pick the buyers up and they go north. Right now, between the prior week and this week, you've got a little bit of a lessening of the retail commitment, but you can see that the commercial papers are starting to get involved. And if you were watching the markets, last week, I forget what day it was, when we came down to that level, we had some serious commercial buying coming in. So the commercial paper is almost net neutral. The large specs still haven't come back into play. But right now, what the commitment of trader report is telling me is that we still have more top side to go. That this isn't. If we were really in a blow off top right now, I think you'd see the commercials much more. I think you'd see them down, down in this level down here, and they'd be much more committed to the short side. I think they're going to run this market up to 2,000, and that's my own opinion, but I'm sticking with it. Right now, I've got that measured move up from the cup and handle on the S&P at 1982.50 area, and I think that that's where we're going to see this week. So last night I did a bunch of homework, and I just want to go through it because I want to show you what I'm looking at in both the ES and the Russell in terms of the big picture this week. So I hope this is not too convoluted right now. Now, the big balance that we're in up here from the gap up that was on 0526, okay, and is represented by the CLVN right here at 1896 and a quarter. That's our range low right now. That's a key level that we do not want to breach if we still think this market is going higher. But the most accepted price right now is the MC VPOC, the microcomposite VPOC, or the most traded price within this whole move up. The most accepted price, okay, is this 19 why does that look like that? 1952.75. Sorry, I was looking at something else. The problem I've got right now is the TF and the S&P. They're dealing with the same two-digit numbers, and it's screwing me up a bit. So we came down here, okay, on Friday. We did not violate the cup and handle, and we came right back down to the most accepted price at this 1952.75, which is right in the middle of the two major value area high and value area low for this microcomposite, up at 1966 and a quarter, and down here at 1924 and a quarter. Now within the larger balance, we have this 56, but more importantly we have the 66 area, and the current value area high right here within the smaller, you can see where this line is pointing to right here, is 1964 and a quarter. Okay, if we can stay above that, okay, then I think we're going to get a rotation back up into the 67 and a quarter, and close out the gap at 71 and a quarter, and take us up to test where they tried to hold value up here at 1974 and a quarter. I'm going to get into this a little bit deeper, but these are both posted into the room, so you got them for record, and you can do a deeper dive in there. So let's do this. Let's go and just take a look at a couple things, and then we'll get right into the charts. Data entry key right now is this 1978 above us. I think that's within target today. Of course, we've got the 1954.50, which is the month open that defines whether or not we're in a bullish or a bearish month. Right now, we're in a bullish month. I'm not even going to go into the intraday numbers today because we've got too much to talk about. Just look at our 20-day ATR targets, 1091 on the RTH 20-day. Our 20-day ATR on the full session is just under 13, and on the Globex is just under 7 and a quarter. Going over to the daily report, you can see that we're going to open up right. Where are we trading right this second? Just so I want to see where we're trading so I can. So we're trading at the 1970. Okay, so let's go back there. So we're going to be trading right at the daily R2, okay, resistant point 2, and above R1. This 6650 is going to be an interesting level, and I'll show you why. And then of course we've got our weekly resistant level right up at the the all-time high up there at 1978.50 area. So keep an eye on those areas. Currently, so we just went up and put a new high in. We have a Globex high at 71.50. So our full session high right now is 1971.50, and our Globex low so far is 1952.50. So our 20-day ATR targets to the upside on the full session, we've already breached the upside at this 1965.36. And see how that 50, 65, 66 area is going to come into play today, and I'll get more into that in just a couple of minutes. And to the low side is 1958.75. There is no news, no big scheduled news this morning, so we don't really have any news. We do have headline risk but we don't have to worry about that. So I want to just go in and just take a look at what the trends. I can't veer off of my natural morning routine, because this is so important to see the big picture and understand where we are within the trend. Trend is very much intact on the monthly. Good slope and separation of the 9 EMA and the 20 SMA. Price is paralleling the 9 very nicely. This trend is very strong on the monthly. Same thing on the weekly. Okay, good slope and separation. Price paralleling the 9 EMA. This trend is very much intact on the weekly. On the daily, we came down, we tested that 20 SMA. We did not close below it. They held above it, and then they went and challenged the 20 SMA on Friday, and then so far today, we've broken back above the 9 EMA, and we're starting to get slope and separation again. Trend is very much intact on the daily, and you can see the Mr. Sneaky, okay, or was it a Mr. Sneaky? Yes, it was Mr. Sneaky on the daily, pointed that downturn to close out the technical gap and test the 20 SMA. Going over to the charts, the geometrics, I've taken the downward sloping fork off because we broke off of it. There's 4 forks on this. There's the long-term upward sloping fork, with the center line, right here, and then we've got the intermediate time frame, and then I just added a new one in here. I'm sorry, I took off the smaller time frame fork, but the key point right here is we're getting an interesting energy point right here at 1986.75. It's due to be tested on what day? July 18th, so this week. And this would coincide too with that 1982 measured move. Of course, we're coming up to test the center line of the upward sloping fork. This is at 1973.50. If we get above the center line of the short-term upward sloping fork, look for a move up, a possible move today up to test this, this 1979, basically come up and test that all-time high by testing the upper line of the intermediate upward sloping fork. If we reject this line, it retested the lower line of the short-term fork, will bring us down into that 1950 area. More likely in 1952.75, but I think if we come back down to that microcomposite VPOC, we're not likely to find the buyers that we found on Friday, and we'll likely come down and test that 1947.50 area, so that coincides with this. There is another energy point down here too at 1937. We do not want to break this 1937 level, and I'll show you why we don't want to break it. But let's go to the these short-term trends and see if we've got any trends coming in on the intraday. We've got a bit of a trend happening on the 4-hour, but we have a technical gap here. A half gap fill approximate, because I did this a little bit early, a half gap fill would bring us back to about 1966 level, okay? And there's that 65, 66 level right there. So see how that 66 level is coming into play again. So we do have a technical gap, but we do have an upward trend on the intraday 4-hour. On the 30-minute, okay, same thing, good slope, good separation, got a little bit of a technical gap, a gap fill. On the 30-minute will take us down to 1969.50. I think you can almost bet that we're going to do this because there's a couple targets down here. And then just taking a look at it on the 5-minute, you got beautiful FUBAR tech gap, Mr. Sneaky, rotation back to close the gap, and we're consolidating sideways right now, so no real trend on the 5 minutes. But keep an eye on the upper time frames to close those gaps. So let's go and take a look at what we've got. So far we've got a Globex high of 71.50. So we have an overnight high of 71.50, which is just above that naked close, okay, the gap close. So I'm expecting both the 71.25 gap and the 69.75 to be taken out. I think that anytime we're opening up outside of value and outside of balance, and range, we got to look for initiative buyers stepping in. But I think we've got a very strong move, and we've got a lot of targets, to the downside still. So I think we're going to get two-sided action. Remember that, we've got that half gap fill down here at the 66. Well, we've got that naked VPOC down there as well, and we've got the other gap fill at 67.25. So I think that we're going to see two-sided action, but of course we have to go through our auction logic questions and go through those 7 questions on what type of day is setting up. And I know I've got some requests for those, and I have to get those out on my email, and I will do that later on. I'm not going to get into them right now because we've got way too much to talk about. So we have to look for initiative buyers stepping in because we're opening outside of value and outside of range. So watch what type of open. When we get an open drive, we're likely to get a strong move up, at least to test that 74 level, if not all the way up to 77 and possibly the all-time high at 78.50. But I think more likely, based on the action overnight, that we're likely to get two-sided action and come down and close some of these targets below us and do at least a half gap fill, if not down, test the range high at 63. Our overnight low, excuse me, is all the way down at that 52. Excuse me. I knew my voice was going to start cracking up this morning. You guys don't want to hear me grunting, but the overnight low is all the way down at that microcomposite VPOC in around that 52.75. It's 52.50, but we came down in Globex overnight and confirmed that we do have some strong buyers stepping in there. We do have an LVN, from the Globex up here at 67 at 66.75. So then again, that plays in to that 1966. Were you going to say something, Howard?
Yeah, we have Globex low at 62.50.
Did I say 52? Sorry, 62.50. Sorry, I can't even read. Thanks for catching that. And that's going to basically come down and give us a test of the range high from Friday. So let's take a look at what this looks like in the bigger picture and start moving our levels over. Okay. Oh, I forgot to get the VPOC. Well, the VPOC overnight is not likely to change. It's going to be 1969. So we've got our overnight VPOC sitting just below the naked VPOC from Friday. So this is what I'm looking at, and this is the way that you basically have to try to trade this. This is going to be an awful open for everybody, okay? Because there really isn't, an edge up here at all. The edge to the upside really is the 75. And the edge to the downside is this 64. You can think about using the 66.25, the value area, the microcomposite value area high, but again, you've got too much here. So you're really looking at this this 64. You really have to go with who takes control. Personally, if I was going to try to trade this, and I am going to try to trade it this morning, I'd be looking for a possible open test drive or open rejection reverse. We've had a bunch of open rejection reverses, and I would look to see if you see responsive sellers stepping in here at 71.50, and if you see a lot of selling coming in here, then you could try to take the trade to the short side in to close the half gap, close out the naked VPOC, close out the naked gap at 67.25, close out the naked VPOC at 66, and come down and test the CLVN, okay, here at 64. You might want to wait until you get below the 66 because they could close the half gap and close these this naked VPOC and then rip it up from there. That's what I'm saying. This is a very, very tough open. Now I'm running long already. As I was saying all Friday, I was building a swing position long. To go and take out that measured move up at 1982.50 area of the cup and handle measured move. So I'm not even going to trade the open unless I'm looking for a long. And I'm personally going to wait until they come back down here and try to buy in. I got another nice add-on last night. I posted it in the room, that Renko reversal. Let me just show you that pattern here because I talked about it before it happened as it was setting up, and then I also posted after it was starting to play out, and then I posted the chart this morning, and that's the ES Renko. Where's my ES Renko? There it is. So this was the setup last night that I was talking about. Both myself and Nino were watching the open yesterday, looking to see if they were going to gap up and get us another run up to that 67.50 was the 66 was the first target, and then 67.25 was the second target. But right when we came up here, I was telling everybody, look for the rank when we tested the upper Keltner line. Look for that Renko reversal bar, and then if we got the Renko reversal and we came up and closed above the upper Keltner, okay, which we did on this bar right here, that we should get a nice walk the line setup up to that 66 and 67.25 and possibly up to the 68. A beautiful run that is continuing to go. I've got all kinds of Theo. Right now my Theo is down below 48.25 is my Theo right now on this new position that I'm taking. I'm running 3 contracts right now, so I've got some nice Theo built up for this. But got to pay attention to these patterns. I point them out, but you got to do your own homework. You got to trade them because they are good patterns. So let's see what we've got. So be careful on the open. Okay, if we do go up and you see initiative, if we get an open drive, or the open test drive and they come down to the 66 and the buyers step in, get long. I still think this market's going higher, and first target is 75. But I can't guide you in this area because there's nothing to lean against until we get to 64. And then if we break 64, then I'm looking for a move down to test the value area high here at 60 and close out the naked close from Friday down here at 62.25. And then possibly moving into the upper distribution of Friday and testing the value area down here at 1960. 1960, I'd be looking for responsive buyers to step in there again. So the first target, okay, below the 64 is going to be that 62.25 gap close with a possible continuation down to 60. If we get back inside of value from Friday, we've got a really nice target, okay, which is the 19, right just below the 1958.75 as your first area to get funded. But I personally would be looking for a continuation down. Come on. I'd personally be looking for a continuation down to test this 1955.50 naked VPOC, okay, and down here at this 56. So there's 56.75, which is the 2-day value area. Just above that, you've got the 58.50. I'm front running it by 1 tick because that's the HVN from Friday, but this area down here has got all kinds of confluence, between the 56.25 and the 55.50. So I'd be looking for a bounce here, if not, just below it at the value area low at 54.75. You've got the 56.25 CLVN, but they might push through because you'll get a destination trade once if we get back inside of the value area from Friday. You've got 80% value area trade down to take out this value area low at 54.75. Below 54.75. Okay, we break below the value area low of the 2-day microcomposite with a very clear target. This will be a nice trade back down to this 52.75. The thing is, I don't think if we come down here and find, I don't think we're going to find buyers here again. I think they're going to push through now. Okay, probably try to break out of the range low. Okay, take out that that microcomposite naked VPOC and push through down to the 51. But I think 51 really doesn't offer us much support, but it will be somewhere where I'd be looking for responsive buyers to step in. But if they don't step in, everything shifts down to this 47.75 area down here. So the target below that is 47.75, and we really don't have anything else until we get down to this 53.25 and this 42.75, which is where they first started this move up. So this is going to be a target and extended target and trade area down here between the 43.25 and the 42.75. Targets to the top. Well, if we break 75, just get long into that 77 and the major target above, which is going to be the all-time high at 78.50. And then, of course, we've got the measured move target at 82.25. Don't try to get short up here, okay? Because we've got way too much above us, and I think if we get above the year open, we're going to see that 82, then that 86. It was 80, I think it was 86.75, and of course I think then we get into a move to test the all-time highs. Okay, let's go into the Russell real quick. Okay, this is going to be a little bit confusing, but don't get panicked around here because it's actually clearer than you think. We have three major zones of balance, okay? Distribution zone, accumulation zone, and distribution zone, okay? We are currently right now trading on the Russell. Where are we trading? We are currently trading at 1167.80. So we're trading right below, okay, what the VPOC is, okay, on this distribution zone. And you can see that this distribution zone right here is the VPOC to this one. Just above it at 70.50 is the one from this one. And then you can see that the value area high on both of them are pretty close. So we're inside of these two value areas, and we're likely to travel the distance this week of both of these value areas. So what you want to do is you want to watch this line right here, this 1156.50, because if we break out of this value area, we're coming down. Okay, we've got a target right here at 53.30, 1153.50, and that's going to take us down to testing the range high from the accumulation zone. If we come down and get inside of this zone, okay, we're likely to come down and test this first target here. Okay, well, 46.70 would be your first target, but I'm really watching this 1137.50 because the 1137.50 tests the value area high of the accumulation zone, and we're likely to get back inside of it. And we've got very strong targets below. You've got the 1130.60 as your first target, but if we break this 1126.70 CLVN, then what we've got is we've got the microcomposite VPOC inside of this value that we break back into, okay, and more importantly, that 1120 microcomposite VPOC, but the 111640, remember the 111640 is the composite VPOC, the most accepted price, trading all the way back to that October the 10th, 2013. So if we can't hold inside of this upper distribution zone and break below this 37 and get back inside of the value area, I think we've got a very strong move down to this 1120, 1116 area. And then below that, we've got some unfinished, okay, and unproperly auctioned territory below in this box that I've got drawn right here, with the value area low from the microcomposite all the way down here at 1098.60. So it's going to get choppy in this zone as they mature this auction, but look for a move down to test the value area low of the accumulation zone down here. If we get below, okay, this box right here, then it's all about this 1070, and I think we're going to test the break below the 1100s and into the 1010s. I don't know how to say that, but going down and testing. If we break this 1070, then I think we've got an intermediate high put in, and probably what will be the year high up at 12. What is it? 1270. But if we can hold above this level right here, this this 5650, then look for a continuation to up to the 1168.30, which I think is where we're trading right now, and a continuation up to test the value area high, okay, up here at 1184. You've got the 76.30 that you've got to watch for, but if we accept value back up here in the 1168, 1170 area, then we're likely to come and test the other side of the value area up at 1184. If we break above 1184, okay, you've got the value area high from the prior zone up at 1193, which is just above this 1190 CLVN. So the first target above with a breakout of value, the microcomposite value, is this 1190. And then if we get above 1190, I think we're got a strong move to test the value area of the prior distribution zone, but more likely up to this 1195.90. And then if we can accept value where we tried to hold value after the last swing high up at 1210.70 here at 1203.80, and I think we go up and we make new highs and break that all-time high at 1212.70. Okay, I know it's a lot to fathom. The recording will be out and you can go through it. Now on gold, okay, I'm still running along on gold, and I said that if we couldn't break out of this this balance area and hold value above. We tried to hold value up here at that 1337 area, okay, we couldn't hold it, and what happened overnight? They came down and tested the composite VPOC. This composite VPOC at 1315.80 goes back all the way to 1024, 2000, I think. 1024, 2008. So they're coming back down, and we couldn't completely break out of value. Okay, so right now we're coming down at 1306.50. Remember that 1306 area is a key, because we got the VPOC, we got the composite VPOC shift up. I think it was on the 7th last week, or maybe it was the 8th. But the former composite VPOC was down here at 1293. So if we can't hold above this 1306 area, we're likely to come down and test the 1300, but more likely going to come back down here, and we could see a composite VPOC shift down to this 1293. I do expect buyers to step in here at this 1293 area, but if we break and we can't hold 1306, you might want to take the short into 1300. I'm not. I'm looking for areas where I can add to my Theo to get long, because I'm still looking for a bigger move in gold. But of course, if the indices are going to go up, gold is going to come back down and test this level. So I'm a buyer down here again at 93. My Theo. I've got my stop right now just down below this 1289. It's sitting at 1288.40 right now. And I'm hoping that it'll hold, but I don't know if it will, because once we get down here, we could come down to this 85. So I'm going to be looking for some areas that I can add to my Theo and take advantage of some of these dips. If we can, hold 1306, okay, look for a rotation back up to 1315.80, and that's the balance, and going to be a big magnet. And then probably a continuation to test the other side of that balance up here at the microcomposite value area high at 1324.80. And then if we can get above that, look for them to come back up and test this 1337 level again. And I want to put a CLDN in there at 37 because we were watching that CLDN in around that 37. It's actually going to be shifted down slightly to 1335.90, and that will actually break above that call it 1336. Is going to break us outside of the range and give us a move to get funded up here at the 37 area, and then likely a continuation again on the breakout up to this 43 and 46. Strong sellers stepped in at 46, but we said that was going to be the big resistance above us to look for responsive sellers to step in. Anyway, that's what I'm looking at gold. Let's just take a quick look at the Renko because I want to see how many bars we've got above the upper Keltner. So currently we've got 1, 2, 3, 4, 5, 6, 7, 8. We're past the 6 bars, okay? Doesn't mean that we can't go higher, but we've got to look, generally I'm looking at 6 to 8 bars. I'm looking for some type of reversal, at least to come back and test the upper Keltner high, which is likely going to be around the 69.50 area again. Anyway, that's going to close out the homework session. It was a long one, I know, and we've got about 5 minutes to the open, 7 minutes to the open, and that is going to conclude our morning pre-market session. Trade well, trade safe, and we will catch you on the flip side. All right, so let me post this chart. I'm going to keep the room open and see if I can catch a trade on the open with you. I am trading live this morning, Kurt. All right, so let's get all my stuff off here and get ready for the market. That move last night was a beautiful move. I'm laying them up for you guys. You got to take these trades when I'm calling them. That Renko reversal was just a perfect trade last night on the open too, which was great. It's going to be hard to get a trade, call a safe trade for you guys this morning. Like I said, with everything, with so much up here. But we'll see what we can do. I'm going to be watching the Keltner probably, the closest this morning. And again, if you like what I do, and like what we do here in Quantum Leap, please give us a shout out on Twitter, and go and give me a like on the video. Spread the word.